Joining us now to discuss today's top stories is the president of Investor Advantage, John Grace, and business analyst and entrepreneur, Tom Maoli. Let's start with you, Tom. We've got this incredible run in the stock market, and now we're getting even more and more indications that consumer spending is going strong. Consumers are feeling very confident. How confident are you that the streak can continue? Well,
they should be confident. I mean, we have the lowest unemployment rate in the history of the country. Interest rates are down. I own new car dealerships. My showrooms are busting at the seams. Service departments are busting at the seams. It's a great time to be in business, and it's a great time to be in America. I think we have a melt-up going on in the stock market. I think there's a lot of cash sitting on the side. A lot of people made a lot of money, and they need to put it to work. They need to earn. Where are they going to get? The returns, if you look at fixed income, they're still low. They're 2 and 3%. They're putting it at risk. They need to earn with it, and they're doing it. It's clear. The market continues to rise day after day.
So you are very confident that the Santa rally is going to continue and well into the next year?
Oh, well into the next year. I'm bullish into 2020. I think, the headwinds that the market had, and it did great, with the headwinds, but the headwinds that the market had are dissipating. You have the impeachment over. Clearly, they're not.
Well, it's not over.
Well,
but
it's on the shelf.
Well, it's delayed, which in itself may cause some complications. But the House did vote to impeach the president. We're waiting for the impeachment managers to be assigned and for this to be formally assigned to the Senate. But it's interesting that on the day the president of the United States gets impeached, only the third time in U.S. history, markets hit a record high, and the same thing the next day.
Right, exactly. But what
does that tell you?
It just tells me that I don't think that the American public or the consumer cares. I don't think they think that the president is going to get through the Senate. I don't think he's going to get impeached, and I think he's going to get reelected, if you want to know my honest opinion. So, listen, we have the China trade deal that, no one's talking about anymore. It's dissipating. He's making a deal behind the scenes. It's going to happen.
Do you think so?
I know.
Do you think that this time it's really a deal, or is it more of a Christmas truce? Because there have been close calls before, and then what happens? The Chinese get the final agreement, and then they pull out the red pen, start making changes, crossing things out, and things that were supposedly agreed upon weren't agreed upon.
Well, listen, the devil's always in the details, but I think that the president has shifted his his focus on getting a deal done. I think he's more flexible. I think he's going to get a deal done. When I was on the show a couple weeks ago with you, I said the same thing. He's going to get a deal done. He's a smart man. He knows what he's doing. He's going to negotiate as far as he can negotiate, and he'll take half, because that's what you do when you're negotiating a deal.
So when you say take half, that means you're very clear that this Phase 1 deal doesn't touch the big issues, the important issues of intellectual property violations, the forced data transfers. As we know, when a U.S. company wants to do business in China, it has to partner up with a Chinese company and transfer its data to them. So you think this is not going to be touched in this deal?
I don't think any of that's going to be touched.
On
China,
trade.
by the way, starting today, China's already started buying in huge amounts our agricultural products. But when you start talking about intellectual property and trade and technology, you're playing the game of operation. I don't know. When I was a kid, I used to play the game of operation, and you hit the side, right? That's where you're talking about. That is a very sensitive subject. I think that's going to take a long time to work out. That is a very complex issue. I think what we're going to do is he's going to focus on the major issues. He's going to get trade back going. We're going to get rid of this tariff issue. And 2020, I think we're off to the races.
All right, Tom, so first, before we get back to that whole game of operation metaphor, which I kind of like. If the U.S. is now demanding that China ups its purchases of U.S. goods, I believe that figure is $200 billion.
That's right. That's right.
Where does that come from in terms of other countries? Because there's going to be an imbalance, considering that China's probably getting that from some other place around the globe. So who are the losers if China shifts focus to the U.S.? And then what could that mean for those countries' relationships with China?
Well, I don't think that they're analyzing it to the nth degree the way you're discussing it. I absolutely agree. But you're talking about they're buying that agricultural product from multiple sources, and yes, people are going to lose a portion of that business. But I think China has the same incentive that we do. They want to make a deal with the U.S. You know, we are a large buyer of their services. We do a lot of trade with China. I don't think they want to have us as an enemy.
All right. I mean, you could argue that it's a wasted opportunity with the U.S. economy this strong for the president to not push ahead and get a more comprehensive deal. Let's bring John Grace into this. John, I want to get your thoughts in terms of where we are with these astounding consumer economy numbers and, of course, the market doing so well. How do you think investors should be responding to this? What's your advice to them?
Well, let's start with the consumers, Michelle. I mean, the fact of the matter is everybody's so high on the income, and it's not as good for some people as it is for others. But for the majority of folks where they're on the lower end of the spectrum, the consumption is a combination of some income, not really strong income for many people, and a lot of debt. The debt levels for consumers is higher than it's ever been by about $2 or $3 trillion relative to just 2008. So that's the first piece of the puzzle. As far as the market is concerned, we really got to figure out how to protect one's profits, because who knows what the next year might turn around to be worse or, not.
So does that mean you'd advise investors to sell at this point?
No, what we advise investors to do is, number one, figure out what kind of risk they can accept. In other words, how much loss are you willing to take in your portfolio? And then see if you can design the portfolio to perform within your loss parameters. That way you won't go through shock and awe when the market does become unglued again.
Well, it's inevitable, I guess, at some point. What goes up must go down. Thank you so much, John Grace, Tom Maoli. Appreciate it. All right, still ahead, the 2020 Democratic presidential